Let's go to Chicago now, specifically the Chicago Mercantile Exchange, where we are joined by Alan Nuckman. He, of course, is Chief Market Strategy with Agora Financial. Alan, great to see you as always. Let's begin with crude oil. The International Energy Agency has gone on record as saying it sees oil prices hitting $80 a barrel unless supply comes on stream to replace what is being lost from Iran and Venezuela. Do you agree?
Yes, I believe we're in a very strong bull trend, and I use crude oil as a barometer of the global economy. And we've been seeing that growth over the last 4 years. Obviously, it's been growing at a longer time frame for the stock market, but in a macro sense, I like all the positive action worldwide that we're seeing in the bigger markets. Now, that's going to bode well for crude oil, and we are at a very fine balance point here. We're back below the 5-year average as far as inventories go here in the U.S. And yes, while we are pumping a lot, there's that demand side of the equation that I don't think people talk enough about. And we had the numbers come out last week. EIA said here in America that we're actually going to produce less next year than expected, end of this year and next year. And so those could all be could be positive. Anything that disrupts supply, you could always get a price shock. There's always price shock potential, especially in the crude oil market.
We've been range bound at just under 70 for a while now. What would it take to nudge it higher?
Yeah, we're trading between 65 and 70 mostly here for a long period of time. I think the biggest catalyst is the dollar. Now, the dollar on Friday made 6-week lows, and we've turned over. We've got a blow-off top. I know you and I talked about the dollar many months ago and many months before that. I was waiting for the dollar to stall. We had a little bit of a short covering bounce here in 2018 after the straight down move in 2017. So if the dollar can decline and we've come back into the trading range between 94 and 95 for the dollar index, a break below that sends us to 93, and then we've got a serious top formation in play for the dollar. That helps out crude, obviously, and that spills over to a lot of other commodities. We may have seen the worst from the metals markets as well.
Let's talk about copper. It has been pummeled, as we know. If we get some clarity, if we get some positive news on U.S.-China trade relations, could copper reverse course and rally?
Yeah, it's one of those examples where I'm looking at not what the market's doing, but what it's not doing. It's not continuing to go down. Let's remember, copper traded between 3 and 325 for a period of time. It looked like it was going to try and break out, and then all this trade turmoil started. So we've declined. We've got a pretty solid technical double bottom here in place. Let's see if that can hold. But like I said, I think a lot of it is the dollar. And if the dollar can decline, that helps out all the metal miners and a lot of these commodities markets. So, I think gold, silver, and copper are good, probably values if you can look 6 months to a year out. I use options as a way to position to have some staying power. But I think that's a good value area that hasn't participated in this overall stock market rally.
Are you long gold right now? Gold, of course, has collapsed all the way down to 1,210.
Right. I think here at this 1,200 level, it's a pretty important pivot. We had a nice reversal off that bottom. Gold's been very disappointing in the big picture. We've been trading between 1,300 and 1,200 for a couple of years with some few exceptions up above and below. But we're just stuck range bound. I don't know what the catalyst is going to be. I don't know if there's going to be a catalyst. But I think from a risk to reward stature here, I'd rather be a buyer, obviously, of gold at these levels than a seller. And again, it's about value. I think there's a lot of sectors that have gone straight up, but this is held back, as has the energy sector. A lot of energy stocks finally are starting to get moving. We saw Exxon break out. If we can get back above this 85 level, Chevron's still somewhat subdued. But I'm looking at some of those Dow components to help out that sector. Let's remember the Dow has been lagging behind the other stock indexes. Again, it's only 30 stocks, so it's not a fair barometer. But look for the Dow to play catch-up and make new all-time highs. Let's remember, it's been since January's top. The Dow is not retaken those old highs, whereas the other markets have.
The trade tensions between the U.S. and China have also roiled agricultural markets. Soybeans, of course, is the clearest example. What do you see ahead for the agricultural commodities?
Well, obviously their crop reports have been interpreted as bearish. Obviously, there's some big crops. We're always one growing season away from some price shock in the agriculture commodities. That hasn't happened in the last couple of years. So let's see. Everything looks like it's on target as far as the harvest goes here. So everything looks good. But I think, again, if the dollar can decline, that can help make our grain markets a little bit more attractive. And again, I'm not banking on these tariff threats coming to fruition. I think that everything should be sorted out in the long term. One last thing I want to point out to get back to the dollar, it comes back to interest rates. Everybody's been so concerned about interest rates rising here in America, and yes, they are. We're going to get a rate hike in September. It's 99% sure, and there's actually the other 1% is a 1% chance of a 0.5% hike. So it's a done deal, but then there looks like a deal, again in December. And then if you go further out, you can go out to March and then June of 2019, and then the rate hikes completely stop. It's completely flat all the way out to the year 2023 and beyond. So the dollar's pricing that in accordingly. So yes, we're going to get the headlines of rate hikes are going up, but the market's already aware of that and digested it, and that's why we are where we are. So if the dollar stops going up, that helps everybody as far as these bullish markets go.
Okay, what is your best trading idea of the week?
My best trading idea of a week, I'm looking for crude to make another breakout to the upside, to push 70 and then attack those highs. Again, every time that it's sold off the distance of the sell-off on top of those old highs. I'm looking for crude to get up to 85. Again, I'm an options player, so look at least 6 months out to be able to ride through the ups and downs, because you're going to get volatility and you're going to get some price movement, but that's opportunity. That's something to pay attention to.
Alan, thanks a ton for this. We always learn a lot when we speak to you. Thanks a lot. Alan Nuckman is Chief Market Strategist at Agora Financial. He joined us, of course, from Chicago. That's it for commodities. Thank you so much for watching. Don't forget you can catch up on all the latest Canadian marijuana news at bnnbloomberg.ca. We'll be back tomorrow at 11 a.m. Eastern Time with another episode of Commodities. Have a great day.